The year is 2030. By then, the global financial system won't look anything like it does today. Paper money will be nearly obsolete. Digital currencies will be the backbone of international trade, and the way value moves across borders will be completely redefined. But here's the part most people still don't understand. One asset is already sitting in the middle of that transformation, waiting for the world to catch up. That asset is XRP. And while the headlines scream about Bitcoin and Ethereum, XRP is quietly being woven into the very fabric of the new global economy. Welcome back to Crypto Equation, where we go beyond price predictions and focus on the structure of what's really happening in finance. Because while most people look for hype, we look for inevitability. And when you understand how Ripple has positioned XRP, you begin to realize that owning just 3,000 XRP today could mean far more than anyone expects by 2030. Let's start with what's already in motion. The financial world is going digital, fast. Banks, governments, and corporations are all moving toward real-time settlements, tokenized assets, and programmable money. Every single one of those systems needs the same thing: liquidity. That's what XRP provides. It's not competing to be another cryptocurrency. It's solving a trillion-dollar problem in how money moves. Think about it. The old banking system relies on SWIFT, a network designed in the 1970s. It's slow, expensive, and filled with friction. Ripple came along with a better idea: a way to send value anywhere in the world instantly, using a digital bridge asset that eliminates the need for pre-funded accounts. That asset is XRP. It's like replacing horse-drawn carriages with high-speed trains. Most people don't see it yet because revolutions never look like revolutions at the start. They look like experiments. But beneath the surface, the infrastructure is already being upgraded. More than 70 countries now have Ripple-connected corridors. Over 300 financial institutions are part of the network. Governments are testing Ripple's technology for central bank digital currencies. This isn't theory, it's happening. And that's why 3,000 XRP could one day represent ownership in the digital rails of the next global economy. The market just hasn't priced it yet. Here's the key idea: XRP's value doesn't depend on speculation, it depends on utility. When demand for liquidity rises, so does the need for XRP. And when that demand is global, driven by trade, banking, and tokenized assets, the price adjusts mechanically. It's not about hype, it's about mathematics. This is where the 2030 timeline becomes so important. Between now and then, nearly every major economy plans to launch or connect a central bank digital currency. The Bank of England, the European Central Bank, the Monetary Authority of Singapore, and dozens more are building the framework. But they all face the same challenge: interoperability. These digital currencies can't just exist on isolated blockchains. They need a bridge, a neutral layer that connects them all. Ripple has been quietly positioning XRP for exactly that role. It's already ISO 20022 compliant, the same global messaging standard adopted by over 10,000 banks. It's integrated into the same data language that the new financial system will speak. That's why insiders call Ripple the Internet of Value. When you realize that XRP could be the neutral asset connecting this new world of tokenized money, the future starts to look very different. Now, let's put this in perspective. The total value of cross-border transactions each year exceeds $150 trillion. Even if XRP handled just 1% of that, the liquidity demand would run into the trillions. With a finite supply of 100 billion tokens and less than half actively circulating, the math paints a clear picture. The market will have to reprice XRP upward to meet the new liquidity requirements. That's not speculation, it's supply and demand at scale. And that's why owning 3,000 XRP today might feel insignificant, but by 2030, it could be part of the foundation of the next financial era. This is how transformation always happens: quietly, slowly, and then all at once. It's easy to miss until it's obvious. By the time mainstream investors realize XRP isn't a banker's coin, but the liquidity layer of the world's new financial network, the opportunity will be gone. History shows that paradigm shifts never announce themselves. The internet didn't come with a press release. Neither did mobile technology or electric vehicles. By the time everyone accepted them, the early adopters had already built their futures. XRP sits at that same inflection point. Right now, the market undervalues it because it doesn't yet understand its utility. But by 2030, as digital money becomes the standard, that will change dramatically. The transition is already visible if you know where to look. Ripple's acquisition of Medico expanded their reach into tokenized asset custody. That means they now hold the keys to secure billions in tokenized real-world assets. They're not just connecting payments anymore. They're bridging value of every kind: Stocks, bonds, real estate, commodities, all tokenized and tradable in real time. And behind every transaction, liquidity. That's XRP's purpose. Ripple has been quietly preparing for tokenization to go mainstream because they understand what most don't. Money and assets are merging. The future isn't about moving currencies. It's about moving everything that holds value. And XRP was designed to do exactly that. Here's where the story gets even more interesting. Ripple's partnerships with central banks aren't random. They're strategic. Countries like Bhutan, Palau, and others are already building CBDC pilots on the XRP ledger. Larger economies are studying its architecture to ensure interoperability between national currencies. When those pilots expand, and they will, XRP becomes the universal translator between digital money systems. That's how you move from isolated experiments to global infrastructure. And that's when the market wakes up. 3,000 XRP doesn't seem like much today because the world still values digital assets through the lens of speculation. But once utility takes over, price discovery changes. It's no longer about what people think XRP is worth. It's about what the system needs it to be worth. And when the system needs an asset for liquidity, it prices it accordingly. By 2030, that's exactly what we'll see. A global network running on Ripple's rails, demanding more XRP liquidity than the market ever expected. This is what long-term conviction looks like. It's not guessing. It's understanding trajectory. Ripple has already positioned itself at the intersection of finance, regulation, and technology. They've done the hard part, building trust, proving compliance, and securing partnerships. The rest is just time, and time always rewards preparation. The funny thing about major technological shifts is that they always feel slow, right up until they happen all at once. That's what's about to unfold with XRP. While retail investors argue online about charts and predictions, the people building the financial future are already moving forward. Ripple's ecosystem is expanding in every direction. Central bank digital currencies, tokenized assets, banking infrastructure, and corporate liquidity management. Each move makes XRP more essential. Each integration closes the gap between theory and necessity. And once the world depends on it, the discussion about price becomes irrelevant. It simply adjusts to reflect function. Think about what the next 5 years actually look like. By 2030, it's estimated that 90% of the world's banks will be ISO 2022 compliant. That means they'll be speaking the same digital language that Ripple's system already uses. Those banks will need a bridge to connect their currencies, their digital assets, and their payment rails. XRP isn't one of many options. It's the only one that's fully proven, compliant, and scalable. When that realization hits, it won't trigger hype. It'll trigger utility. That's when 3,000 XRP goes from being a speculative bet to a piece of infrastructure ownership. The people who held through uncertainty will finally understand what they were really holding. Not a token for trading, but a key to a system that underpins global value exchange. The same way early internet users owned pieces of the web before it went mainstream, XRP holders own a share of the new financial web. That's the kind of asymmetry that builds generational wealth, not because of luck, but because of timing. The hardest part is believing before the world agrees. The easiest part is wishing you had once it does. The markets have a way of rewarding those who act on logic before emotion. The logic here is clear. Global liquidity is going digital. Settlement must be instantaneous. Currency borders are being erased. And every one of those trends leads directly to what Ripple has built. It's not a matter of if anymore, it's when. Ripple has been signing partnerships that the mainstream barely reports on. Their relationships with the World Economic Forum, central banks, and payment networks position them at the table where financial policy is being rewritten. While most crypto projects fight for survival, Ripple is shaping regulation. That's the difference between noise and relevance. And that's why 3,000 XRP tucked quietly into your portfolio might look small now. But by 2030, it could represent entry into an entirely new tier of the financial system. The reason people miss these transitions is because they expect obvious signals. They think there will be a clear announcement. Now it's time to buy. But that's never how transformation unfolds. The switch happens behind the curtain. Banks start using new corridors. Payment providers migrate liquidity. Central bank digital currencies go live quietly. Then one day, the volume on the XRP ledger explodes, and everyone pretends it was obvious all along. But the truth is, it's obvious right now. You just have to look where others aren't. That's the entire principle behind wealth creation in every era. The world rewards those who can see inevitability before confirmation. The data already tells the story. Ripple's ODL volume continues to climb. More financial institutions are testing or integrating with RippleNet. Tokenization is forecasted to reach over $16 trillion in value by 2030, and Ripple's Medico acquisition puts them right at the heart of that market. Every one of those trends connects back to XRP. It's not just a currency, it's the lubricant that makes the new machine move. Without it, liquidity freezes. With it, the global system becomes seamless. That's the scale of what's coming, and it's what very few are prepared for. Now let's get personal, because this isn't just about institutions or governments. It's about people like you, the early adopters who see patterns before headlines. You're watching this because something inside you already senses the shift. You might not have all the technical details memorized, but you understand the direction of the world. The same intuition that told investors 20 years ago that the internet would change everything is the same one whispering that digital value transfer is next. Trust it. It's what separates participants from spectators. Imagine it's 2030. The financial reset is complete. Banks use Ripple's rails to settle instantly. Tokenized assets flow freely between networks. Central bank digital currencies dominate the economy. XRP sits quietly underneath it all, invisible but essential, just like the internet protocol you never think about when you open your browser. You check your wallet and realize those 3,000 XRP aren't coins anymore. They're a piece of financial history. You didn't chase hype, you recognized structure. You didn't wait for permission, you understood inevitability. That's what conviction looks like when the future arrives. The world won't remember every influencer or every rumor. It'll remember the architecture that made the new system possible, and that architecture runs through Ripple. 3,000 XRP isn't a lottery ticket. It's alignment with the next phase of global liquidity. The people who hold it understand they're not betting on hype, they're owning transformation. And transformation doesn't shout, it whispers, until one day, it can't be ignored. That's where we are now. The whisper stage, just before the volume spikes. By 2030, when the financial system has fully digitized, most people will say they always knew XRP was big, but they'll say it from the sidelines, because the window to act early doesn't stay open forever. Right now, it's still possible to be early. To hold an amount like 3,000 XRP and understand that it represents something far more significant than its current price. To see what's coming before the crowd does. The opportunity is hiding in plain sight, just as it always does. You can either wait for confirmation and pay the premium later, or you can recognize inevitability and position yourself today. Because when the world finally catches up, it won't reward the loudest. It'll reward the most prepared. The next 7 years will pass faster than you think. The system will change quietly, then suddenly. And when it does, the people who saw it early will look visionary, while the rest look for someone to blame. Don't be in that second group. See the structure forming. Understand what you hold. And remember, 3,000 XRP might look like just another crypto position today, but by 2030, it could be the bridge between your present and the financial future. This is Crypto Equation, reminding you that the world doesn't reward hesitation, it rewards understanding. Don't wait for the crowd. Study the system, trust the data, and act before the window closes. I'll see you in the next one.